Hey everyone, welcome back to Corporate Decoder, where we translate corporate jargon into real-world drama. Today we're cracking open the annual proxy statement of Westwood Holdings Group, a money management firm. Think of this filing as their annual stockholder report card mixed with a popularity contest and a hefty dose of corporate legalese. So here's the scoop. Westwood wants you to vote on a few things, including who gets to sit on their board, ratifying their auditors, approving more stock options for the executives and key employees, and giving an advisory nod to how well they're paying their top dogs. Buried in the details are some interesting stories about compensation, board dynamics, and where they see themselves going in an increasingly competitive investment landscape. Let's dig in. Right off the bat, we get a friendly letter from the CEO, Brian Casey. It's all very cordial, inviting us to a virtual meeting, urging us to vote. But remember, folks, even the nicest invitations can have a hidden agenda. First stop, the table of contents. We see the usual suspects, director elections, auditor ratification, some kind of stock incentive plan, and vote on executive pay. Don't let your eyes glaze over, because the juicy details are usually hidden in plain sight. Time for the director election. These are the folks steering the ship, so it's important to know who they are. We see a list of 6 nominees, all with impressive backgrounds. They are finance experts, seasoned business leaders, and folks with non-profit experience. Westwood is painting a picture of a well-rounded, experienced board. But let's see who they really are. Brian O'Casey, the CEO, is of course on the list. He's been with Westwood for decades. Having a CEO on the board is pretty standard, as they bring inside knowledge to the table. Then we have Ellen Masterson, a retired partner from PricewaterhouseCoopers. She brings deep accounting and finance expertise, which is crucial for overseeing Westwood's financial reporting. Having someone with an auditor's eye is always a good sign for corporate governance. Jeffrey Norman is also up for re-election, previously with General Electric. He's been on the board since 2007, so he is the old guard. Randy Bowman, co-founder of a logistics company, brings an entrepreneurial perspective to the board. It's good to see some non-finance folks in the mix, folks with different views. Next is Jay Hale-Hoke, an active investor with decades of experience with both private and public companies. His firm, Hoke Public Equities, is also one of the company's biggest investors. Finally, Catherine Murray has over 33 years of experience as a senior finance executive in the energy sector. Her resume rounds out the group with financial expertise that complements the other members. Let's move on to the corporate governance section. This is where Westwood tries to convince us they're playing by the rules and acting in the best interests of shareholders. Here we see the board is mostly independent. That means most of the directors don't have close ties to management. This is a good thing, as it theoretically provides better oversight and prevents cozy relationships from influencing decisions. The Compensation and Human Capital Committee decides how much the executives get paid. These are the people who set the CEO's salary and bonus. This committee is also overseeing their human capital initiatives related to diversity, equity, and inclusion. The focus on this says they recognize this is important to a good and diverse workforce. Westwood currently separates the roles of CEO and chairman, but the board doesn't need to stay that way. They say that Richard Frank is stepping down from his role and a new member will be appointed as chairman of the board. The board has a refreshment policy that sets age limits and tenure caps, with delays if appropriate. The board also requires evaluations of its members and establishes a director emerita position. This focus on freshness says the company values modern, engaged talent. Every good company talks about risk oversight. The board is supposed to be keeping an eye on all the things that could go wrong, from financial meltdowns to cybersecurity breaches. They are specifically monitoring operational, financial, legal, and regulatory, AI, cybersecurity, and strategic risks. They are also monitoring environmental, social, and governance (ESG) risks. Randy Bowman brings substantial knowledge of a planned sponsor's perspective in the areas of investment management oversight and decision-making in the allocation process. Do you want to nominate your neighbor to the board? Here's how. They have to be received between the close of business on December 31, 2025 and the close of business on January 30, 2026. Now we get into what the directors actually make. The non-employee directors each get a $70,000 annual retainer plus extra for chairing committees. Also, each is granted stock in the company. The company is showing it is investing in its people with equity in the company. Time to meet the executive team. Besides CEO Brian Casey, we have Fabian Gomez, the president, and COO, Terry Forbes, the CFO, and John Jeringa, the chief compliance officer. These are the key players running the show at Westwood. Murray Forbes joined in 2018 and previously worked at KPMG. Having prior audit and finance leadership is a big deal for a CFO. Leah Bennett was the president of Westwood Wealth Management, but she is no longer with the company, leaving the role at the end of 2024. Now we get to the good stuff, how much the executives are making. Remember that, by the way, they are a smaller reporting company, so they can provide less detail. Total firm assets for 2024 were $17.6 billion, up $1 billion from 2023. Looks like they are on the right track. They launched 2 new energy ETFs. New products are a good sign of the firm expanding its assets. They were named one of the best places to work. It is nice to see that the firm is investing in making a place where people want to work. The CEO's base salary stayed the same at $750,000, but he also gets a cash incentive bonus based on financial and strategic objectives. His 2024 cash payment was equal to 99.8% of the target. This says that Casey met almost all of his goals for the year. Fabienne Gomez, the president and COO, also got a cash incentive bonus, also at 99.8% of his target. Seems like the top executives performed pretty well. Westwood also has a savings plan where they match employee contributions. They also make discretionary profit sharing contributions. This is a solid benefit that most employees can take part in, which is a great sign. Westwood also requires the CEO and some of the other NEOs to hold a certain amount of company stock. Since Leah Bennett left in December, we get to see some of the terms of her departure. As long as she keeps her confidentiality, non-solicitation, and non-compete obligations, she will receive payments for the next few years. However, if she takes clients from Westwood, her payments will be reduced. Bennett's unvested shares of restricted stock were forfeited, and any bonus for the fiscal year was forfeited as well. It is not an ideal situation for Bennett, but the company is protecting itself. There are often clauses of what will be paid if they are terminated. Under the plan, in the event of death or a change in control, unvested, time-vested, restricted stock awards would vest. Casey's agreement contains a double trigger, meaning there needs to be a qualifying termination within 24 months following a qualifying change in control event. Now let's talk about the auditors, BDO USA. Companies pay them for auditing the financial statements and for tax services. It's very important they keep it separate. The total fees billed to the company were about $917,000 in 2023. The audit committee pre-approves all services performed by the auditors to make sure there are no conflicts of interest. They approved all services performed by BDO in 2024. This gets to a key thing you are voting on: the 11th amended and restated stock incentive plan. In short, they are asking for approval to issue more stock to employees as compensation. They need stockholder approval for this plan under the NYC rules. Without it, they lose their power to entice people to stay with the company. They are only asking for 200,000 more shares. There are some limits on how these awards are granted, such as most awards vesting no earlier than the first anniversary. The plan also says they cannot grant discounted stock options and shares are recycled. It puts in safeguards for shareholders. The board recommends voting in favor of this amended plan. If they don't get to issue more stock options, they will have to pay out more in cash to the leadership team. Another key point here is the board paying the executives too much. They are asking you to provide an advisory vote. The company says their compensation program emphasizes pay for performance and has stock ownership guidelines to align the executives with you, the shareholders. Let's review what the board is doing with the company. All future material transactions will be subject to the board's approval. Now, let's see who owns the company. Here are the shareholders that own more than 5% of the company. Brian Casey is the biggest with 5.1%. Next, it's Allspring Global Investments. Finally, the audit committee signed off on the financials. Always good to see that they've done their due diligence. So what's the story here? This proxy statement paints a picture of a stable company that wants to continue to grow. Revenue and income are up and the leadership seems solid. But the proxy also offers a glimpse into some challenges. There's that departure of the president of wealth management, Leah Bennett, and increased auditor costs. Westwood is asking shareholders to vote in favor of these existing practices. Vote for this team, vote for this payment plan, and all is right in the world. The takeaway? This is a company in transition trying to adapt to a changing market while maintaining its core values. Keep an eye on their ability to generate organic growth and attract and retain talent. That will be the key to their future success. Thanks for tuning in to Corporate Decoder. If you enjoyed this deep dive, please give this video a like and subscribe for more breakdowns of SEC filings. What company do you want me to decode next? Let me know in the comments.